Picture this. You have a crystal ball, letting you glimpse the future of crypto before it catches fire. Right now, Ethereum is flashing signals that seem almost eerily similar to those that blazed across the charts before its last jaw-dropping all-time high. But is this really the beginning of another legendary run? Or just a mirage shimmering in the ever-shifting desert of digital assets? To find the answer, we need to dive beneath the headlines and explore the intricate machinery powering the world's second-largest blockchain. Ethereum is not just another cryptocurrency. It is the nerve center of decentralized finance, the stage for non-fungible tokens, and the test lab for some of the most ambitious technological experiments of this century. From the high-rises of Singapore to the innovation hubs of Berlin, Ethereum has ignited the imagination of everyone from garage coders to Wall Street heavyweights. Let's rewind to the autumn of 2021. In just over 30 days, Ethereum's price rocketed from roughly $3,800 to just under $4,900. That breathtaking ascent wasn't only about hype or retail excitement. It was powered by something more subtle and powerful, a relentless, almost silent accumulation of ETH by those with the deepest conviction. During that period, so-called smart money investors were quietly buying and holding, not selling. Fast forward to today, and the same pattern is beginning to play out again, but with far higher stakes and a global audience watching. In recent weeks, Ethereum's technical and on-chain indicators have shifted from caution to optimism. Take the age-consumed metric. This measure tracks how much dormant ETH coins, untouched for months or even years, suddenly becomes active. Recently, this number has plunged from a sky-high 795 million to just around 12 million, marking a staggering drop of over 98%. To visualize this, imagine a towering mountain shrinking to the size of a small hill overnight. The meaning is clear. The most steadfast Ethereum holders are not selling. They are, in fact, gripping their coins tighter than ever, seemingly unmoved by the daily ups and downs. This behavior is critical. In traditional markets, when veteran investors refuse to sell into a rally, it often means they expect even bigger gains ahead. In crypto, this conviction is magnified by volatility, a sign that those who understand the game best are preparing for another leap forward. Meanwhile, the titans of global finance are making bold, calculated moves. Consider SharpLink Gaming, which recently added over 19,000 ETH in a single purchase. That brings its total Ethereum holdings to an eye-watering 345,000 ETH in investment worth billions of dollars. This is not a casual trade. It is a strategic, long-term bet on the future of decentralized finance. BlackRock, the giant among asset managers, has also plunged deep into the Ethereum pool. Through its iShares Ethereum Trust, BlackRock now controls about 1.5% of all ETH in existence, a slice of the pie most national treasuries would envy. If you add up all the Ethereum held by institutions, you get a picture of a market where large players are not just dipping their toes in, they are diving headfirst. Bit Digital, a publicly traded company specializing in digital assets, has grown its Ethereum stash to over 120,000 coins. Sam Tabar, the company's CEO, sums it up. We view Ethereum as foundational to the next phase of digital financial infrastructure. When blue-chip companies commit billions to Ethereum as a strategic asset, they send a message that echoes across the market. But there's another fascinating trend. Ethereum's strength against Bitcoin is rising. The ETH to Bitcoin ratio, a measure of Ethereum's muscle compared to the original cryptocurrency, has surged by about 50% since June. This echoes the momentum seen in 2021, just before Ethereum's last spectacular rally. Today, ETH hovers just below a crucial psychological resistance level. Should it break through $4,400, history suggests the doors to new all-time highs, possibly as high as $5,300, could swing wide open. Some analysts, such as the ever-optimistic Gert van Lagen, point to a so-called fifth wave pattern, which, if complete, might launch ETH toward the mythical $10,000 mark. But let's not get swept away by euphoria. Crypto markets are never straightforward. There are always risks lurking just out of sight. If Ethereum slips below $3,128, the bullish narrative could unravel in an instant. And let's not forget the fierce competition. Can Ethereum continue to outpace Bitcoin? Or will regulatory uncertainties and the rise of smart contract rivals like Solana, Avalanche, and Polygon derail its momentum? Jamie Elkalev from BitGet Wallet puts it succinctly. Institutional accumulation is no longer hypothetical. It's happening. ETF inflows could trigger a supply squeeze. We are at a crossroads. The tension is palpable. Will Ethereum finally step out of Bitcoin's long shadow and redefine the rules of crypto? Or will we witness yet another cycle of hope, followed by disappointment? The moves made in the coming months will reverberate for years, shaping investment portfolios and the digital economy alike. So what needs to happen for Ethereum to truly break through? And what could stop it cold? Let's chart the two main paths ahead, one paved with golden opportunity, the other riddled with risks. Let's start with the bright side. The surge in institutional buying isn't a passing trend. It's a tectonic shift in how the world's largest investors view digital assets. Companies like Digital and SharpLink Gaming have accumulated colossal reserves, while BlackRock's iShares Ethereum Trust now commands more than 1.5% of the total supply. As Jamie Elkele warns, institutional accumulation is no longer hypothetical. It's happening. ETF inflows could trigger a supply squeeze. Imagine what could happen if even a fraction of the world's pension funds, insurance giants, or university endowments decide to allocate a slice of their trillions to Ethereum. The resulting demand could send ETH soaring not just past old highs, but into uncharted territory. We could see the kind of vertical price moves that crypto veterans will talk about for generations. But Ethereum's story isn't just about price action. Its ecosystem is expanding at breakneck speed. Over $7 billion worth of real-world assets. Everything from tokenized U.S. treasuries and real estate to carbon credits and fine art are now secured on the Ethereum blockchain. That's nearly 60% of the global market for tokenized real-world assets. The significance? Ethereum is quietly revolutionizing how value is created, transferred, and stored. In the near future, we may see entire industries, from real estate to collectibles, transformed by Ethereum's ability to tokenize and transfer value seamlessly. Decentralized finance, or DeFi, remains one of Ethereum's crowning achievements. The total value locked in DeFi protocols has soared past $80 billion. To put that in perspective, this is more than the annual GDP of many small countries. Users are entrusting Ethereum-based services with their wealth for lending, borrowing, insurance, derivatives, and yield farming. The variety and complexity of these applications underscore why analysts like Michael van de Poppe proclaim, Ethereum's rise is absolutely phenomenal. The whole ecosystem has a lot of room to grow. On the technology front, Ethereum continues to evolve. The recent Pectra upgrade, rolled out in July 2025, has dramatically improved staking, making it simpler and more secure than ever before. By consolidating validators and slashing operational costs, Pectra has paved the way for greater network efficiency and resilience. Femex Analysis puts it clearly. The Pectra upgrade aims to consolidate validators and reduce operational costs, enhancing the network's efficiency. A more secure, efficient network draws in even more capital, developers, and users. Regulation is another critical piece of the puzzle. For years, uncertainty around securities laws kept many institutional investors on the sidelines, but recent comments from SEC Chair Paul Atkins suggest that Ethereum's staking and wallet software may fall outside the reach of securities regulations. This is a huge relief for the ecosystem and could open the floodgates to even greater institutional participation. If regulatory clarity continues to improve, it will be a powerful catalyst for mainstream adoption. But every opportunity has its obstacles. Regulatory risk remains the wildcard. While the SEC's current stance is cautiously optimistic, any abrupt policy reversal could send shockwaves through the market. The threat of government intervention always looms over crypto, and regulatory shocks can upend even the most bullish scenarios overnight. Competition is heating up as well. Ethereum may hold the crown for smart contracts today, but challengers like Solana, Avalanche, and Polygon are closing the gap quickly. These networks offer faster transaction speeds, lower fees, and innovative solutions for scaling. If Ethereum stumbles due to governance issues, technical glitches, or slow upgrades, users and developers could migrate to rival chains. The tech world is littered with examples of once dominant platforms losing their edge. From a technical standpoint, Ethereum's price is tracing a classic cup-and-handle pattern on the charts, a formation that often precedes explosive rallies. But this bullish setup depends on ETH holding above $3,128. If the price slips below this critical support, the rally could fizzle, leaving investors to lick their wounds. The next major barrier sits near $4,402. Only a strong, sustained push through this zone can pave the way to new highs, potentially $5,300 and beyond if momentum holds. Gert van Lagen, the technical analyst, goes further. If the fifth wave structure unfolds, Ethereum could eventually reach the $10,000 mark, a level that would have seemed unimaginable just a few years ago. But let's talk about what all this means for you. Whether you're a curious newcomer, a grizzled crypto veteran, or simply fascinated by the future of technology, there are key lessons here. First, remember, momentum in crypto is rarely random. It is the result of deep structural forces, such as institutional adoption, technological breakthroughs, and the shifting sands of regulation. By keeping an eye on on-chain metrics, like long-term holder activity and the ETH to Bitcoin market share, you can spot early signals of major market moves. For example, when dormant ETH stays locked away while prices rise, it usually means the smartest investors are bracing for even higher valuations. Second, risk management is everything. The crypto market is famously volatile. Regulatory surprises, technical failures, or even a single tweet from a government official can flip the narrative in an instant. Always set clear exit points, diversify your holdings, and this can't be stressed enough. Do your own research before making any big moves. Legendary investors from Warren Buffett to Paul Tudor Jones have emphasized the importance of discipline and due diligence, especially in fast-moving markets. Third, keep your eyes on the bigger picture. Ethereum is more than just another digital coin. It is the infrastructure powering decentralized finance, non-fungible tokens, and the emerging wave of real-world asset tokenization. Even if you never buy a single Ether, the innovations happening on Ethereum's network are likely to touch your life in ways you haven't yet imagined. For instance, new business models are already emerging in gaming, supply chain management, and even identity verification, all built on Ethereum's technology. Let's not forget the macro backdrop. The proposed Genius Act has the potential to unlock trillions of dollars in liquidity, accelerating blockchain adoption on a scale the world has never seen. Imagine a world where real estate, government bonds, intellectual property, and even art can all be seamlessly traded and verified on-chain. Ethereum is positioning itself as the backbone of this new era, a digital infrastructure for the next generation of the global economy. Expert voices continue to highlight this optimism. Victor Olin-Rewaju, a respected analyst, draws direct parallels between current ETH accumulation and the legendary Bitcoin rallies of the past, saying, "Buying pressure resembles Bitcoin's accumulation before it surged to a new all-time high in the first quarter of 2024. These are not just wild guesses. They are grounded in hard data and years of market observation. Still, caution is warranted. The crypto landscape is littered with the stories of overhyped projects that fizzled out. For every Ethereum, there are dozens of coins that soared briefly before crashing. That is why vigilance, research, and a healthy dose of skepticism are your best allies. Let's take a step back and consider the broader implications for society. Ethereum's impact is already rippling through industries. In real estate, tokenized property sales are becoming more common, allowing for fractional ownership and instant settlement. In the art world, NFTs have enabled artists to reach global audiences and receive royalties automatically. In supply chains, Ethereum-based platforms are making it possible to trace goods from origin to delivery, improving transparency and trust. Looking ahead, the integration of Ethereum with emergent technologies like artificial intelligence and the Internet of Things could unlock entirely new opportunities. Imagine smart contracts that automatically execute complex agreements between machines, or decentralized autonomous organizations that coordinate global projects without a central authority. These futuristic scenarios are already taking shape in pilot programs around the world. And then there's the environmental angle. Ethereum's transition to proof-of-stake has slashed its energy consumption by over 99% compared to proof-of-work systems. This makes Ethereum one of the most sustainable blockchains, aligning it with the growing demand for eco-friendly innovation from both consumers and policymakers. So will Ethereum smash through its old highs? Or will resistance and risk put the brakes on this rally? The answer lies at the intersection of conviction, innovation, and regulatory clarity. If institutional investors keep buying, upgrades continue to roll out, and regulators provide a green light, the path is clear for Ethereum to set new records. But any misstep, whether technical, competitive, or legal, could see the rally unravel as quickly as it began. Here's something most people overlook. While all eyes are glued to the price chart, the real revolution is happening behind the scenes. Ethereum's adoption by the traditional financial system is accelerating. With trillions of dollars potentially set free by legislative reforms, and Ethereum already capturing more than half the world's tokenized asset market, the biggest moves might not yet be reflected in daily price swings. Imagine a future where your home, car, retirement fund, even your favorite work of art, can all be securely represented and traded on the Ethereum blockchain. This is not science fiction. It's a future already taking shape. In some jurisdictions, property titles are being moved onto the blockchain, reducing fraud and simplifying transactions. In the financial sector, banks are exploring how to offer yield products and loans using Ethereum's DeFi protocols, opening new pathways for both retail and institutional investors. As we stand at this pivotal moment, the message is clear. Watch not just the price, but the deeper currents shaping Ethereum's journey. Whether you're an active investor or a curious observer, these are the trends that will define the digital economy for decades to come. If you found this deep dive valuable, make sure to hit that subscribe button and join us for our next exploration of the forces shaping the world's digital economy. What's your take? Will Ethereum break out and make history, or will it hit resistance and retreat?